Hey folks, Dan Frio here with your market update for October 16th, 2024. So we saw mortgage rates increase or decrease a little bit yesterday. Is that going to continue today? Well, that's what we're going to talk about. But first, I want to tell you about, we have a special event this afternoon at 2:30 Central Time. Kyle Seagraves and myself are going to go over down payment and down payment assistance. A lot of people still think you need 5, 10, 15, maybe even 20% down. You don't. In some cases, you might not need any. Check and see if any of these grant finders will help you. So we just added the Illinois Grant Finder into the Win the House You Love website, so check that out. We have $1 million to give away. Check out and see if you're eligible for those. And then the Grant Finder, this is the National Grant Finder. We've handpicked 3 programs in here just for you guys because there's really no ramifications in regards to increased rates, a lot of fees, or a lien on your property. So check those out. We will be talking about those today on our live event. But without further ado, let's get to the economy. So right now, the only news we have out on the economic calendar today is import and export prices, and they're coming down, and they're coming down nicely. You see right through here, import prices, they were down 0.04, and export prices were down 0.07. Okay, so it's going down. That's in the right direction. Okay, so what we want to talk about right now are bank earnings. Bank earnings are in season right now, and the reason why I want to explain that to you is about a year and a half ago, we had a bank called Silicon Valley Bank. If you don't remember it, they basically went out of business, and FDIC stepped in and they had to resolve the situation. But a lot of people kept saying this is the start of banking crashes. Okay, every time there's a little spark somewhere, it's a crash of something. Okay, so what I wanted to talk about today is bank earnings. Okay, so now it's the season of bank earnings right now. Yesterday we had the 3 of the biggest banks or financial institutions come in and they blew out earnings. So I want to go over to this right through here. It was a regional bank analysis right through here. So we have an interview with this gentleman right through here. He's First Bank CEO and president. They just came out with their earnings. Again, this is a regional bank. They don't make money on like selling you stock and portfolios and mergers and acquisitions and things like that. They have to make money between the spread of what they borrow the money for or from or at, and they lend it at. Okay, so that's the margins right now. As the Federal Reserve reduces rates, it's actually going to help banks like this. So let's get and see what his take is on it. I'm just going to play about half the episode because I want you to get the idea of that. And then we're going to look at some of the bank earnings and some other things that we're going to talk about in regards to this. And then I also want to go over the state of the economy and mortgage delinquency and what the CME FedWatch tool is telling us about future Fed rate cuts. So let's get to the interview.
All right, so your stock, it closed up higher yesterday. I want to ask you, you had a beat on EPS, but you had a pretty big miss on revenue, according to LSEG. What happened in the quarter? What happened that revenue came in so much under expectations, but you were able to beat on profit?
Yes, Frank, we did have a beat on EPS, and as you know, earnings can have a lot of moving parts to them. We had one where our core earnings, the reason the stock was up, our core earnings were actually up nicely. But we did have a non-operating transaction during the quarter where we had a revenue, we had a sale of some securities out of our securities book. As a $13 billion asset regional bank, we carry about a $1.6 billion securities book. We did do a sale in there. Okay. We took actually a loss on that, which took revenue down, but that should really benefit future quarters, which is one of the reasons that the stock was up.
Okay. I want to get to a key metric for all banks. That's net interest margin. You were able to grow your net interest margin year over year. A lot of the analysts expected that very important metric, the spread between loans and deposits, to actually be under some pressure this quarter. How were you able to grow it over the last year? And also, what's your expectations going forward with Fed rate cuts?
Yes, Frank, you're hitting on really probably the most key metric for most of the regional banks. As we were the first regional to put out our earnings release, but that metric, a lot of the Wall Street banks, of course, have a greater fee income from things like investment banking. The spread between our loans and deposits is the most critical measure, and the margin that we make between those loans and deposits is really, again, a critical measure. We were actually a little ahead of expectation again for the quarter. And that's a combination of, we had loan growth during the quarter. This has been, 2024 has not been a great year As you know, the economy's been relatively slow. The loan demand has been relatively slow, but we had about a little over.
Holy snakes, this just popped up. Look at the return. Their stock is up 70% this year. So this is another area where the haves and have-nots. If you have some money, let's say if you put $10 in it, you got a 70% return. Okay, so you're not getting that anywhere else. This is what I'm also trying to educate you guys on. So go to my YouTube channel, but when the video's over, and I posted on there, what do you guys want to talk about? Do you guys want to talk about stocks, bonds, cryptocurrencies? It's right through here. So make sure you put in your vote on where you want me to kind of further this educational tutorial with, because we'd like to expand broaden our horizons on other asset classes other than real estate. I talk about real estate because I'm a mortgage loan officer. So if you're in need of a mortgage, I'd love to help you. But without further ado, let's get back to this interview. I just wanted to explain, as he's walking through this, just how explaining things as he's discussing them. So
7% annualized increase in loans on our balance sheet. That helped that margin. Also with the interest decrease that came in, that helped on the cost of deposits.
So when you say 7% growth, do you mean by dollar? Because I'm looking at your earnings right now. I see deposits were up 3% year over year. However, borrowings, as you call it in your earnings report, actually down 19% year over year. So I wanted to ask you about that. You're a Southeast-based bank. You're based in Tennessee, but you have branches in Georgia, you have branches in South Carolina. I mean, when it comes to loans, what are you hearing from your customers on both the residential side and also on the business side?
Yeah. So Frank, those borrowings, what that's referring to is actually where we're borrowing. The lending that we do was actually what's up quarter over quarter, and so we're fortunate in that where we sit geographically in that Tennessee, Georgia, Alabama footprint is an area where we still have very strong economic vibrancy. We are continue to see in-migration. Actually, Robert Frank was on a story earlier this morning talking about how folks are migrating in Tennessee and Georgia being two of the key states. And so we benefit from that. So as a bank, one of our key activities is making loans, and that in-migration is really helping. Corporate moves into our part of the world continue to happen at a significant rate. And so again, all of those benefit both the consumer side on lending, but also benefit on the business side on our.
Okay, so we'll leave it at that. Sorry to cut it short. The videos are lengthy enough, so just wanted to get your take on that. And then we go over to the earnings reports, and this is what we saw yesterday. So we had three of the major financial institutions came out yesterday with earnings, and they all beat expectations. Now we're having the regional banks coming in, and they're looking pretty darn good as well. So this is where a lot of the financial stocks were yesterday. We go over to the treasuries. Now treasuries also are starting to dip on Fed comments. What were the Fed comments? Well, a lot of the Fed officials right now are saying we're not going to do 50. But we're going to continue to cut, and it's right through there. So there was three Fed officials coming out yesterday talking about that. And then we go over to the mortgage delinquencies. And I know people are saying, okay, mortgage delinquencies are going to spike, and they're going to spike out of control, and foreclosures are going to hit the market because there's a recession. Folks, quit thinking negative. Okay, so here's what we're seeing in the front on when it comes to delinquencies. Here's where we are right now. We're at 1.71 in Q1 of 2024, 1.73 in Q2 of 2024. How does that relate? Well, you have to look at it over history. We want to look at that. So where has history been in the past? Well, if you look at prior to the crash in 2008, we're basically right in line to where we were for decades before that. So delinquencies in line right now. We also have some things we're moving in our favor in regards to the inflation front. Middle East is starting to settle down just a little bit. So crude oil prices are coming down now to about $70 a barrel. That's going to help very much on the inflation story. And then we go just taking a snapshot of our economy right now. Here's what we got. Okay, so this is where the Federal Reserve puts interest rates right now. So their target rate right now is 4.75 to 5%. And we're going to look at that over over a time period to see where we're expected to go from here. But if you look at everything else, inflation's in check at 2.2 right now. They want this at 2, but it's coming down where we're at 9. We have the unemployment rate ticking down. The last reading was at 4.1, and we have GDP coming in at a robust 3%. So that's telling us the economy is moving. People are working. Wages are good, but they're not. Prices are not out of control. So now what's the Federal Reserve going to do at this point? Because Fed officials are coming out all over the place saying we're not going to cut rates like we were doing. So if you go over to the CME FedWatch tool, and this is if you're new to the channel, you're going to go over and see CME FedWatch group. What do? Well, they're going to tell us in 22 days what the expectations are from the Fed. Are they going to raise rates, cut rates, do whatever? Now, this isn't 100% perfect, but it sure does give us a trend line. So right now we're right through here. So 4.75 to 5. You can see that right through here. So the federal funds rate, 4.75 to 5. So that's where it is right through here. These are interest rates across through here. Okay, so you're seeing, and these are the dates. Okay, so at the November 17th meeting, there is now a 90, what is it? Almost a 97% probability that they're going to cut rates. How do I know? Well, we're going from 4.75 to 5 down to 4.5 to 4.75. So that means a interest rate cut is coming from the Fed. So that's what we're expecting right now, and it isn't. I don't think it's going to continue at the 50 basis points. But if you see in this chart, it's basically saying in every meeting other than the March of 2025, there's going to be cuts, and that's what we're going to continue to monitor on this channel. So if my name is Dan Frio, if you like what you see, visit me on YouTube at the Rate Update with Dan Frio. I do these videos every day, at least 2 videos a day, the opening bell and the closing bell, to keep you guys informed of real estate, stock market, equity markets, as well as cryptocurrencies. And if you want to learn more about those, please make sure to put in your vote right through here. Go to the community tab and let me know what you want to learn about. There's 3 or 4 options right there for you to choose from. So thanks so much for watching, guys. God bless. Have a fantastic afternoon. I'll see you here at 2:30, our live event going over DPAs, and then I'll give you the closing bell and let you know how all this mess ended for the day. Thanks for watching. Take care. Bye-bye.